Now see this question. Following is the balance sheet of Techno India Limited as at 31st March 2020. This balance sheet is given here. Proper balance sheet. Shareholder fund is given. Reserves and surplus is given. Current liabilities, non-current assets, current assets, everything is given. So you have to just follow the steps. Only then you will be able to follow the question. Otherwise, you will get confused. This is notes to accounts regarding reserves and surplus. What are the components of reserves and surplus? So the component is surplus in balance in statement of profit and loss. Now we will write here cash flow statement for the year ended 31st March 2020 as per accounting standard 3 revised. See, accounting standard 3 and accounting standard 3 revised are different. So that's why you have to state this revised word also. Now again we will start from here, cash flow from operating activity. The first step is we have to calculate the net profit before tax and extraordinary items. So here we will write net profit before tax and extraordinary items. So the formula is that we have to take the difference between opening and closing balance, and the formula is closing balance minus opening balance. So it will be 2,30,000 minus 1 lakh. It will become 1,30,000. Now we will add non-cash and non-operating expenses to it. For that we have to check the statement. So, but here you will find that various assets and liabilities are given. So no non-cash expenses is given, no non-operating expenses is given. It may be in intangible assets, that goodwill might have been written off, that is not there. You have to remember the steps. It may be a depreciation information that is also not present in the question because only one asset is there, that is land. So that's why we don't have any non-cash or non-operating expenses, as well as here you can find investments also in fixed assets. So that investment may have some non-operating income like interest received, dividend received. So these all are missing in the question. That's why we don't have second step in the question. We will move towards the third step. Third step says that you have to check your current assets and current liabilities. So various current assets are given. So first current asset, you see inventory. Opening balance was 8 lakh and closing balance is 9 lakh. It is increasing. So it will be subtracted. Then trade receivables, it is 12 lakh and the closing balance is 11 lakh 50,000. It is decreasing. So we will add decrease in trade receivables, decrease in trade receivables. And decrease in trade receivable is how much? 50,000. Yes, 50,000. So 50,000 we will add. Then inventory we have to reduce. Fine. Cash and cash equivalents will not be considered here. Come into current liabilities. Trade payables are given. It is also decreasing. So it has to also be deducted. So we will add them first. And it will become 1,80,000. Now we will subtract less increase in inventories, increase in inventories, so inventories are increasing by 1 lakh, so we have to reduce 1 lakh. Then we have to reduce also decrease in trade payables. Trade payables are reducing how much? Trade payables are reducing 450, so 5 to 2,50,000. So 2,50,000 is also to be reduced. So that means total 3,50,000 is to be reduced. 3,50,000. So now the final answer will be in brackets. It will be an answer, negative answer. So we will here write cash used in operating activity. And it will be 3,50,000 minus 1,80,000. So it will be minus 1,70,000. So that's why it will be in brackets. Now second part is cash flow from financing activity. Cash flow from investing activity. For that, we have to check the balance sheet. See, this area we have used in operating activity, and this area we have used in operating activity. You have to check whether any part of the balance sheet has been not covered in the full cash flow statement. That means your question will not be correct. So now in investing activity, we have to look after this area, non-current assets. There is only one tangible asset, and land is opening balance is 5 lakh and closing balance is 6,60,000. We can prepare a working note also, we can prepare land account also, but on the face of it, it is clearly visible that my land is increasing. And why my land value is increasing? Because I would have purchased the land. That is the only reason. So, because no information is given otherwise, so I will consider it as purchase. So, purchase of land, and because it will reduce my cash and cash equivalents, that's why it will be an outflow, and the amount is 1,60,000. 1,60,000. So there will be no other information. That's why it will be also cash used in investing. Cash used in investing activity. And cash used in investing activity will be 1,60,000. Now coming to third part of this cash flow statement, that is cash flow from financing activity. Now for financing activity, you see, first we have covered the whole asset side in investing and operating activity. That is complete. Current liabilities have already been used. Now we have only this area, shareholder fund and long-term non-current assets. Oh, sorry, non-current liabilities. So non-current liabilities are not there. We have to see the shareholder fund. In fact, we have used the reserves and surplus also for starting the cash flow statement. So this information all is now left with to be used only. So this way your each and every information given in the balance sheet should be used in either of the activities. You have to check it properly. Whether any information has not been used, you have to check it. Okay. Now your share capital is increasing from 20 to 25 lakh. So that can increase only when you are issuing shares. Otherwise, any information should be given. So it will be treated as issue of shares, proceeds from issue of shares, that is 5 lakh. Now the whole balance sheet has been covered. We can recheck it again. This information given in the notes to accounts has been used for net profit before tax. Cash and cash equivalents we will be using. Trade receivables, inventories we have used, land we have used. Then trade payables we have used, reserves and surplus, share capital. All information given in the balance sheet has been used properly. Reserves and surplus, see, reserves and surplus note to account is given. Here we have used that. I hope it is clear now. Okay. So this is the way to check your question, whether I have left it any other information or not. If any additional information is given, that also need to be incorporated in working notes in the accounts or in cash flow statement as and when required. Now we will calculate the cash flow from financing activity first. Cash flow from financing activity is 5 lakh. Now we will add these all three. And we will calculate net increase or decrease. So we first check. See, there are two negative items. It will be totaling to 3,30,000. So inflow is more than outflow. So the result will be net increase cash and cash equivalents. So the answer will be 3 lakh 30, 70, 4 lakh, 1 lakh 70,000. So net increase will be 1 lakh 70,000. The answer will be positive because the positive value is greater than the negative value. Now we will add the opening balance of cash and cash equivalents. Opening cash and cash equivalents opening cash and cash equivalents will be how much? 3 lakh. So if we will add 3 lakh in this, so the answer will come 4,70,000. So in our balance sheet also, the closing cash and cash equivalent should be 4,70,000, and you can see that it is given 4,70,000. So this way we can assure ourselves that almost whatever we have done, we have attempted it in a correct manner. So the answer will be closing cash and cash equivalents four lakh 70,000. And this is our answer. And this way we have completed the question. So these are the steps which need to be followed when you are preparing cash flow statement. Write each and every information properly with proper presentation, in which column to write. If there are more than one addition or subtraction, then you should write the amounts in the inner column in this manner. Then you should go to the second column, and this column will have always final amounts for these three activities: operating, investing, and financing, because these three need to be added in the last, and net increase decrease need to be find out first. So if you feel that if any queries there regarding the whole process, how to proceed, see, these are very simple numericals. As and when we will be proceeding in this chapter, the numericals will become complicated. But as far as all the adjustments are concerned, all the calculations are concerned, we have discussed each and everything in detail. Now, the more practice you will do, the more benefit you will get. So just now you have to do practice on your own. But remember that you have to follow the steps. If you will follow the steps, only then you will be able to proceed in the question. You have to recite each and every rule for each and every entry. Then you will be able to complete this question. It is right now we have attempted simple ones so that you will be having an idea how to prepare the full cash flow statement, what steps need to be followed. At the time I am reciting that first step is this, I will find out in this manner. Then second step is this, but I don't have any information regarding this anywhere provided in the question. Then we will proceed to the third step. Then in third step, whether there is any decrease in current assets or increase in current assets. Then in fourth step, no tax information is given in the question. Then in fifth step, we will find out cash flow from finance investing activity. Sixth step, we will find out cash flow from financing activity. So this way you have to proceed in the question. Step wise, you have to complete each and everything. So be particular about the steps.